So I want to keep this relatively informal. None of us are going to make presentations. It's going to be like a discussion type format. And with that in mind, if anyone in the audience has any questions while we're talking, because something comes up in your mind that you want to ask immediately, just jump in. I mean, don't feel that you have to wait until the end. When I put this panel together, I wanted to get investigative journalists who are held to different standards to investigators. There are a lot of investigators at this conference, and private investigators investigate, they produce reports, and they typically will only give it to the client. The standards of sort of proof required to sort of make allegations in reports, it's very different to journalists who have to publish their articles where the people you are writing negatively about, will read them, as will their defamation attorneys. And, the risks are much greater, and you have to be far more careful when writing a story than writing a private report. So we have Tony Hetherington, who's basically a consumer champion. He's a very well-known journalist in Britain, primarily for the Financial Mail. Right, Tony? And a lot of his work is people who who have a grievance, believe they've been ripped off in some manner, write to Tony, and he tries to assist them. And then the other panelist is Richard Smith, who's a blogger, principally for Naked Capitalism, and he spends a large part of his time investigating securities and other frauds. And, my background, OffshoreAlert wasn't set up as a conference company. I'm an investigative financial journalist. I've been a journalist all my working career. The only reason that my firm began to hold conferences in, 13, 14 years ago, was because I was being sued so much for defamation, and it's crippling. It's financially crippling. I couldn't pay my legal fees, so I had to come up with other sources of revenue, and that's how this conference that we're at today, which is our fourth in London, and we've held 13 in Miami, that's just how it came about out of necessity. Because, with journalists, because you're publishing, you're just routinely at risk, both from lawsuits and, physical violence. I was quite amazed when the guys from Eastern Europe, who are based in Eastern Europe, were talking yesterday when I asked them about, whether any of their staff had been assaulted, and the answer was no, which I find staggering. If you're based in Eastern Europe, I'm surprised that they're still alive, much less never been assaulted. So when you investigate fraud for a long time, it takes me seconds to detect fraud. Literally seconds. So I just want to show, I'm going to start off by just showing two ongoing schemes, which, I can talk about, and I can name the individuals involved, the companies involved, because I live in the United States of America. In 2010, the Speech Act was passed unanimously, which is virtually unheard of in American politics. To get the Republicans and Democrats to agree on anything is virtually impossible, but this was passed unanimously, and it protects U.S. residents from foreign defamation judgments. This isn't a luxury that Tony or Richard enjoy. they're very vulnerable, being based in Britain, which has extremely draconian defamation laws. So we're going to go to the website of Coral Student Portfolio Fund, which is based in Luxembourg. The size is about £135 million, so approximately $200 million. So when I'm looking for stories, people ask me, how do you find stories? Just go to Google, type in a search term like low risk, high return, and you'll come across a website like this. So this is a purported performance chart for a student accommodation fund. And student accommodation funds are actually quite popular, and they're sold as ways of making very steady returns with low risk over long periods. And there are so many scams. Virtually everyone that I've seen is an overt fraud. So I'll type in that search term, I'll come across something like this. So I know within, as quickly as my fingers can locate the performance chart section of the page, my eyes can assimilate this thing that's on the screen. So seconds, every time you see a purported performance chart like that, it is a Ponzi scheme. So essentially with a Ponzi scheme, the money just goes into a pot. The returns are controlled. They're not based on any underlying profits. If the returns to investors were based on underlying profits, it wouldn't be a Ponzi scheme, and the performance chart would not look like this. When you see this, there's a big pool of money, and whenever investors want to make redemptions, the money is just taken out of the pot and given to investors. And I'm sure some of you here are thinking, well, this is obvious, we already know that, which is a fair point. Some of you might not know it. But for those who think this is obvious, I'm going to give you the names of some of the very well-known companies that provide services to this very obvious fraud. So the banker is the Royal Bank of Scotland. The administrator is Apex Fund Services. The auditor is Ernst & Young. And the law firm is Loyens and Luff. I don't know if I'm pronouncing that correctly. The investment advisor to this overt Ponzi scheme that claims to have, £135 million of investors' money is a British firm. And that firm is called CBRE Indirect Investment Services Limited. And it's regulated by the Financial Conduct Authority. So I'm going to bring in Tony because he has some experience with the Financial Conduct Authority and its predecessor, the FSA, right? Financial Services Authority. And he's going to just talk about whether the fact that the investment advisor of this scheme should provide any comfort to investors or service providers.
No. Looking at the FCA register is, to members of the public, a reassuring factor because it uses words like authorised, regulated, approved. Therefore, if you're Mr. and Mrs. Joe Public, you think these people have been properly vetted. These people have been in the industry for years. These people have been around for ages. Nothing adverse is known against them. They're fine. No, it's a shallow judgment. It's a shallow judgment because the FCA itself only makes a shallow judgment. It only looks at what it knows has happened, and it only looks at what it knows has happened within what it calls the perimeter. If it's not covered by the Financial Services and Markets Act, the FCA isn't terribly interested. If it's outside that, then it's outside the FCA's perimeter. So you can get a company which is authorised and fully regulated to take on investment tasks doing something else which the FCA doesn't say it regulates. Now, in the instance we've just seen, if the investment advisor says, well, yes, I give investment advice, doesn't mean that the person receiving the advice actually takes it. And that's not compulsory. It doesn't mean that the advisor is giving advice which is of any practical use whatsoever. What it does mean, though, is that if you're a member of the public, you will see the investment advisor is authorised and regulated. And that's a reassuring factor to you, but it gives you, in reality, absolutely no protection at all. And you shouldn't be misled by it.
And I actually think it's one of these situations where the ultimate victims do actually believe, as you've intimated, that if it's FCA regulated, I mean, I get emails from them, they actually believe it. Okay, if it was a scam, it wouldn't be approved, it wouldn't be registered with the FCA. The service providers that I mentioned, quite frankly, I think they know that it really has no significance, but it enables them to just check a box, which may protect them in some level. The second Ponzi scheme I want to show is the Victus Student Accommodation Fund. There are just many of these. And by the way, the first one that I showed you, the guy who's the principal of that, John Kennedy, is just coming off a £1 billion Ponzi scheme that was also student accommodation related. And when I was doing research, the Brandau Group, he was the founder or co-founder of the Brandau Group. I think the fund was called Brandau Student Accommodation Fund. When I was actually doing research, it was an obvious Ponzi scheme. The performance chart was exactly like this, and then as with all Ponzi schemes, it just collapsed. I couldn't find a single instance anywhere on Google of anyone describing it as a Ponzi scheme. Which is remarkable. Not a blogger, not somebody on a forum, not a journalist. So this is the second one, the Victus Student Accommodation Fund, which is based in Guernsey. I'm not sure of the size. I think it's over £100 million. And again, you can just see the purported performance chart is similar to the first one. It's basically any time you see a diagonal line trending upwards with little or no variation over many months, it is by definition a Ponzi scheme. I recently exposed the Belvedere Management Group, which is a massive criminal enterprise in many different countries. One of the aspects of this wide-ranging fraud was the Kajani Resources Fund. I reported that it was a fraud, that it was a Ponzi scheme. Literally the only evidence that I had was this. And people thought, I was being reckless, irresponsible. But that's all you need. It's like walking down the street. How do you know something's a car? Well, it's by the curb, or it's moving. It's got four wheels. It's got a chassis. It's got a steering wheel. You know that's a car. If somebody said, no, that's not a car, you'd think they were crazy. Well, it's no different with this. That's the equivalent of the chassis, the steering wheel, and the wheels. So, the Victus Student Accommodation Fund, again, the banker is the Royal Bank of Canada, very well-known bank. The administrator is JTC Guernsey Limited. The auditor is BDO, which, in my experience, crops up time and again in Ponzi schemes. It's got to the stage now where if I see a performance chart like that, before I've even started finding out who's involved, it's got to the stage now where there's almost an assumption on my part that BDO is going to be the auditor. And it doesn't matter whether it's BDO Cayman, BDO Gibraltar, South Africa. The law firm is actually a company I think has probably sponsored one of our events, but I just believe, the true value is providing honest information to you people who attend the conference, not for me to think about appeasing sponsors, past, present, future. That's what you pay your money for. So Carrie Olson and Squire Sanders. The promoter is Crossland Fund Managers, and this is listed on the Channel Islands Securities Exchange. So I want to bring in Richard, because one of the things that Richard focuses on is stock exchange fraud. So Richard, I mean, this is listed on the Channel Islands Securities Exchange. Should that be a source of comfort to investors, service providers, or anyone else?
Absolutely not. CISC is a funny one. It had its own scandal a few years ago with frauds, and it's recently kind of flirted with a stock exchange that I know and love, now sadly defunct, called GXG Markets, which has had, when it was alive, all of the apparatus that you'd expect. It had an admissions process. It was MiFID I compliant. It had introducing brokers who were regulated by somebody, FCA if they were UK brokers. It was a Europe-wide stock exchange, so there were, I don't know, Swiss brokers on there, German ones, the occasional Dutch one, some Danes. And I suppose it kicked off in about 2012, and by the time I started getting really interested in it, it had about 80 listed small-cap stocks on it, and about 40% of them were just blatant frauds, including some really extravagantly odd propositions. There was a company on there that was going to take over the French foie gras market by raising 30 million geese in China. There was an outfit that looked for funding to look for buried treasure in the Caribbean, which turned out to be a retread of an ancient fraud run by the same guys from about 2006 onwards. There was an American broker that used to act for a Filipino princess who was in charge of a bunch of islands that submerged at high tide, from which she operated frauds. Really, it was a collection of just the most bizarre stuff, and it was all regulated by Finanstilsynet of Denmark and the FCA. And for about, I guess, a couple of years, I was sending tip-offs to those two regulators and to the New Zealanders, who also had brokers on there. And then suddenly, I noticed a Hawaiian mobster operating a fraud, mailed them again about that, more in hope than expectation, and they suddenly called the police, and they suddenly inspected GXG Markets. And at that point, they discovered that GXG hadn't really been complying with any of their listing requirements, or hadn't been enforcing any of them, and they found 70 different instances where either the broker wasn't really regulated at all, or the accounts weren't filed and they were tolerating that, despite, normally they would just delist things that didn't put their accounts in time. And it sort of slowly emerged that really what they were doing was generating listing fees by listing just about anything from anywhere, whereupon it just kind of sat there and never traded. Now, that's kind of puzzling. That's not really how a pump and dump scheme is supposed to operate. There should be some trading volume going through. And it looks as if what was actually happening was that the GXG market never really had a functioning piece of order execution software at all, and all the real action was taking place off-market. And I've found a way to sort of dig down and work out what that all was. And the biggest operator I found was an outfit called London Capital NZ, which was a New Zealand registered financial services provider, a GXG broker, and they appeared to be operating a series of absolutely enormous pyramid schemes in the Far East, particularly, I suppose, China, but also Malaysia, India, Indonesia, a bit in Australia. And there was a sort of succession of them in operation. And they'd run them initially over the German exchange, the Frankfurt junior market, which the Germans closed at the end of 2012. London Capital promptly migrated to GXG and just got going again. And what they were doing was ramping the prices of the stocks themselves and simultaneously selling a pre-IPO opportunity, so-called, via a pyramid scheme in the Far East. And of course, as the stock price climbs, this pre-IPO opportunity looks more and more attractive. The pyramid just gets fed and fed and fed. And although pyramid schemes usually fall apart very quickly, these ones, because of this very comforting price performance on these manipulated stocks on the other side of the planet, grew to enormous size. There was one called Virgin Gold, which seems to have topped out in multiple billions, $2 or $3 billion. There was one called Questus, which eventually entangled two Arab princes and a Malaysian billionaire, and that was $1 billion. And the accounts on GXG were tremendously funny. It had 500 quid in its current account as cash, and $1 billion of completely fictional with profits policies as the sort of collateral. And these policies just kind of arrived with no explanation in successive accounts until it was worth $1 billion. And they used that as a vehicle for, well, apparently defrauding a couple of Arab princes. I'm not quite sure about that one, quite what was going on there. But definitely as an advance fee fraud type of scheme in Italy, where there have been 15 arrests by now. What else was there? Oh, Astra Resources. It's changed its name now, but you can still trace it. This was a colossal originally Australian fraud. It had all sorts of assets, and it was always announcing deals. It had an Indian coal mine that didn't exist. It had an oxygen generation system that seemed to work by magic. It had £500,000 in its bank account from its first fundraising, and a maximum capitalisation of 2.8 billion euros. And it was bolstered by a research report from Malaysia that said it was actually worth 60 billion. Now, this stuff is all raving mad, but it completely eluded the attention of the market supervisors at GXG for about 18 months. And then Finance Stilsinet suddenly paid a visit, realised that it was just a monstrosity, and told them that they were going to lose their licenses. The interesting thing that happened next was that it took another 6 months to close them down. And GXG, while they had the sort of axe hanging over them, were still issuing press releases saying they were looking for another buyer, and they were considering their business model and so forth. They hawked themselves to that same Channel Islands Stock Exchange, who got very excited about the whole thing. And then they must have read the Finance Stilsinet report, because 10 days later they said, oh, we're not touching this. And GXG closed its doors. Website vanished. There were about 60 or so hopeful little companies that probably weren't frauds. They were small cap startups. I mean, those companies always look a bit flaky. They've never got a trading record, but they weren't obviously ridiculous kite flying exercises. And they were all left high and dry. And there was about 2 billion of market cap that just suddenly vanished. And there's going to be no follow-up that we know of by Finanstilsynet in terms of sanctions against the executive officers of that exchange who, mismanaged it in a sort of grotesque manner. There are going to be some civil lawsuits by some of the little companies who really wasted their time for 2 years. They never got connected to any funding sources via that exchange. There's a sense in which both GXG Markets itself and Finanstilsynet were operating their own kind of con job, I think.
So basically, the GXG Markets, when I looked at the listings, I couldn't find a single company that was listed that, in my opinion, wasn't an overt fraud. So the fact that anyone, there was only one reason that I could see for listing on GXG Markets, and that was you were doing something illegal.
Yeah.
So, the point being, like just like you can see a Ponzi scheme just from its purported performance chart, there are certain exchanges that just the fact that a company's shares are listed on them really, it's beyond a red flag. It's almost absolute evidence of wrongdoing. And GXG Markets disbanded under the weight of fraudulent activity. The Channel Islands Securities Exchange used to be called the Channel Islands Stock Exchange, where the Channel Islands Stock Exchange, the CISX, went out of business amid scandal and re-emerged as the Channel Islands Securities Exchange, the CISE, although the website is still CISX.com, under the weight of scandal, just like, GXG Markets. So that then raises the issue of even quality jurisdictions, and of course that's a relative term. But the Bermuda Stock Exchange had a Rupert Murdoch company listed that, as far as I could tell, was only listed so he could commit tax evasion, or one of his companies could commit tax evasion in Australia. All the evidence available, that just seemed its sole purpose. The Australian tax authorities fined his group a substantial amount of money after determining that this tax dodge was illegal. So it wasn't avoidance, it was evasion. And the Bermuda Stock Exchange, the shares were delisted. What often happens in offshore centers is you're voluntarily allowed to do something, whereas in reality, the regulator is telling you to do it. And just the way things are done offshore is, it's like a gentleman's club, not a gentlewoman's club. These are, crusty old white guys, who still think it's colonial times. A nod, a handshake. That's how things are done. The Bermuda Monetary Authority, I blogged about this recently. I asked them for the names of any individuals or companies that they'd ever penalized in their, I think it's 45-year existence, and they didn't specifically answer it, so I had to do my own research. I went to their website, I looked at every single press release they'd issued since, I think over the last 5 or 6 years, and there were only 3 of them that related to any sort of action taken against anyone, and in each case it was like, an obvious action, and yet there were countless promos. There was one press release they'd issued saying Bermuda Monetary Authority holds fantastic insurance seminar. Now, I'm quite pleased with our conferences, but I don't ever issue a press release saying, OffshoreAlert holds fantastic, conference. So even in relatively, high-quality jurisdictions like Bermuda, on stock exchanges and in general, you get some pretty Mickey Mouse events happening. And a classic example is a company called Lines Overseas Management, which is quite a substantial investment group in Bermuda. Jesus, their entire foundation was built on penny stock fraud. I mean, in the early days of OffshoreAlert, man, I was writing about Lines Overseas Management left, right, and center. And it was just crude securities fraud. Nothing sophisticated about it whatsoever. The chairman of the company was the former CEO of the Bank of Bermuda, Donald Lyons, one of Bermuda's sort of most respected business people. And the SEC ended up filing a complaint alleging securities fraud against Lines Overseas Management. This is long after we'd been exposing them, and their shares were listed also were listed of Lines Overseas Management on the Bermuda Stock Exchange, and the Bermuda Stock Exchange never sort of put out any announcement saying that this company had been, whose shares were listed. There was no requirement for LOM to put out a press release, even though they were publicly listed, saying, hey, we've been accused of securities fraud in the United States. And whenever anything material happened in the SEC action, there was no corresponding announcement on the Bermuda Stock Exchange letting their shareholders know. And I asked the CEO of the Bermuda Stock Exchange about why, and he said, everybody knows about this already. So, it was beyond my comprehension. I thought any publicly listed company was required to disclose material information in a timely manner. And Lines Overseas Management is also a big shareholder in the Bermuda Stock Exchange. So you had a situation where they were a major shareholder of a stock exchange, their shares were listed, they got accused of securities fraud in the United States, and they weren't required to put out any press releases. And Bermuda's a well-run jurisdiction. Bermuda's a sort of a high-quality jurisdiction. So just on the topic of offshore centers, there's a formula that I use. So if you're looking to identify fraud, which is the sort of subject matter we're talking about, anytime you see any company which has the major shareholders are offshore corporations, so substantial offshore shareholders plus related party transactions equals fraud, not some of the time, not most of the time, every single time in my direct experience, which includes 6.5 years of living in Bermuda and 15 plus years of publishing OffshoreAlert. I cannot recall a single instance where I saw a company that had significant offshore shareholders plus related party transactions that was not fraud. So I want to talk about Tony. If a consumer, member of the public, writes to you and they sort of mention, like the first words are, okay, I put my money in an offshore scheme. As an experienced journalist, can you run us through what goes through your mind?
The first thing they usually say is, I never thought I'd be writing to you. And then they tell me how much they've lost or how much is at risk. Classically, they're reluctant to accept that it's losses. They raise questions, they ask for advice. They're often unwilling to accept that they've actually lost money. I had a mother and daughter in a pair of investors come to me who'd put £400,000 into an offshore investment, which had been promoted to them by a salesman here in Britain, The money was then supposed to go into an offshore fund in Switzerland. The fund was supposed to invest in a scheme that was secret to most members of the public, whereby central banks, including the Fed, leak currency out to banks and into the public arena at a discount. In other words, it's cheap money. They sell money at a few cents off the dollar, and it's guaranteed. It's totally, perfectly safe, but it's so secret, it's been going on for years, but you need millions of pounds to get into it. And this little fund in Switzerland had supposedly discovered a backdoor into the scheme, and these people, this mother and daughter in Britain, had put their life savings and even mortgaged their home and put £400,000 into this. And I gently explained to them that this scheme had been around for a long time in the minds of the people who were marketing it, but it didn't exist. And that I was awfully sorry their £400,000 had gone. If it was possible to put pressure on the perpetrators to get a bit of it back, they might have to settle for getting a quarter of their money back, a half if they were very lucky, but in all likelihood, it had pretty much gone. And it was then that they told me that they felt sorry for the salesman who had convinced them of the honesty of this scheme and the success of it, because he'd put his own savings into this. So as soon as I got them their £400,000 back, the salesman had very helpfully found them another back door into exactly the same scheme through another offshore jurisdiction, and they were going to put the whole £400,000 straight away back into the same thing with the same salesman, if I could get it back for them. And at that point I said, no, I'm not going to bother with this. It's fictitious, and I can't wave a magic wand and get your money back. And if I could, I wouldn't, because you're only going to throw it away again. And I walked away from them, and they got quite upset about that. But they'd lost the money already, and nothing I was going to do was going to get it back. What I'd like to do, though, is build on what Richard said a moment ago about the value of stock exchanges, the value of having your shares quoted, your fund quoted, whatever, on some kind of exchange, because this is something I looked at closely in one particular arena in Britain in the recent past, involving carbon credits, because one company was set up, a company called CNI, Carbon Neutral Investments, was set up to purportedly provide an exchange system whereby people would invest in carbon credits, they could then sell the carbon credits back. These were supposedly bits of paper that allowed companies to pollute the atmosphere, and they were supposed to be rocketing in price because of the Kyoto Protocol and all sorts of other things that the UN was laying down and was providing machinery for regulating carbon discharge all around the planet. So this was a surefire way of making money. The problem was there was no true exchange. What you got was, in effect, a website run by CNI, which listed companies which sold carbon credits as an investment. These were companies that had been accepted onto this so-called exchange, but there was no two-way market. You could invest in carbon credits, but you couldn't turn the bits of paper back into money, because what you got were not certified credits, which is what mega companies around the planet were using. What you got were voluntary credits, and the public didn't understand the difference. Voluntary credits were a PR stunt or an ethics measure, whereby a small business that wanted to could put money into planting a tree somewhere to make up for the discharge on their diesel van. It was not a way of investing and then selling the bits of paper back to make the money. So the snag here was we had an exchange that wasn't really an exchange. And the sting in the tail is this. It was run by a man called Paul Seekins. Paul Seekins is fully authorised as an approved person by the Financial Conduct Authority, and before that, by the Financial Services Authority. And if you look on their website, he's still there. He's still regulated. He's still approved. Because technically, he didn't do anything wrong. He provided a machinery whereby other people did things that were wrong, but the things they did that were wrong were outside the regulator's remit. They weren't covered by the Financial Services and Markets Act. And the FSA and its successor, the FCA, throw up their hands in horror at carbon credits and say, well, they're new bits of paper, they're new investments, and when the legislation that set us up came into being, they hadn't been invented, they hadn't been produced. So the legislation doesn't cover them, therefore we don't cover them. We only regulate Mr. Seekins and his company, and they're not actually selling them. They're providing a framework whereby other people sell them. So what the FSA did was they put out a public warning against a company that they themselves had licensed, that they themselves regulated, run by a person that they themselves had approved. And it's still there if you look on the internet. Now you might say that things have moved on. We've now got a new regulator, the FCA, except it's not really a new regulator. It's a changed name of the old regulator. It has slightly different tasks. The prudential side of it mostly has gone over to the PRA, the prudential regulator, housed inside the Bank of England, which has gladly taken it in, and it is in effect a small subcommittee inside the Bank of England. It doesn't really have the clout that the FCA itself has. But the FCA is just a change of name, and you could almost say it's a change of name. The names have been changed to protect the guilty. It wasn't doing a proper job before, it's not doing a proper job now. Why do I say that? Because if you look on the FCA website, you find exactly the same thing going on. The FCA has issued a public warning about a company called Gemax. What's Gemax doing? It's providing machinery for the sale of carbon credits, as if it was an exchange. It's doing exactly the same thing that the FSA did before, under the new name. And Gemax is another regulated company, but it's not committing any offence in the eyes of the FCA. So we've got an absurd situation where regulators can turn their back on companies because they're not offending directly against the rules, they're facilitating the offences committed by others, and the regulator can turn away from it.
So it's interesting. Regulators, you say they don't do that, they're just very arbitrary. If you think about integrity when they took action against the hedge fund manager who was cheating the rail authorities by not paying his rail ticket.
That's right.
Now that upset regulators a great deal, and they now struck him off. He can't be a
Correct.
regulator. Yet you've got just the needs of the financial markets, which again arbitrary. Why is there no action taken? So they can if they want.
You've almost answered your own question in saying it's arbitrary. They almost make up the rules as they go along. And part of those rules, I spent 6 years, just over 6 years, as a member of the FSA's Consumer Panel, which is a statutory body that advises the board of the Financial Services Authority. And my specialist area was financial crime intelligence gathering and enforcement. And I've got no qualms about saying that the decisions they make change from month to month and year to year. And what is flavour of the month, like boiler rooms at one time, won't be flavour of the month next year. I'm not giving away any secrets when I say that the FSA called me in almost, in fact they were apologising for the fact that they weren't going to be taking on as many consumerist cases in future, like boiler rooms, where people might lose their pension fund or their life savings because they were switching their priority to insider dealing. Now, you could argue that insider dealing, because it's a criminal offence, should be a priority for another body like the Serious Fraud Office. But by making it a priority for the Financial Services Authority and now the FCA, the investigation and any resulting prosecution can be financed by the industry itself, whereas the Serious Fraud Office is publicly funded. So, in effect, the government is getting a police action paid for by the industry that's being prosecuted, that's being investigated, and whose members are being prosecuted, and not by the public purse. And I think if you look behind the scenes at the Treasury that pulls the strings at the FSA, that's what was going on there.
Britain is an interesting jurisdiction. It's very popular with criminals because it has an aura of respectability. And if you actually, in an unbiased unpatriotic manner, analyze whether that respectability was deserved or not, which is something I've tried to do. It's actually amazing how sort of corrupt Britain is, and it's sort of worst form of corruption, because it's not like Nigerian corruption where everybody knows that it's corrupt. It's subtle. It's a very subtle form of corruption. And incompetence. I mean, as an investigative journalist, anytime I deal with British regulators, British law enforcement, trying to get information from the courts, it's just like Looney Tunes land. Trying to get information that you're publicly entitled to at the High Court, which is not too far away from here. There's this, you just get one obstacle placed in front of you after another. It is a nightmare, something that in the US would take me less than 1 minute and cost me, I don't know, $3, you know, £2, you know, to get a copy of a complaint, and you can see a bunch more. In London, it takes weeks, if not months. It takes hours of your time. It costs you, you know, £200-300. You know, it's just the British mentality lends itself to corruption. The very first conference that we had in London was at the Mayfair Hotel. The first day of the conference, I'd exposed a British former policeman, then current solicitor, who'd committed a huge fraud. He wrote to the hotel, threatening to sue the hotel if I mentioned his name at the conference. The hotel came to me with a letter that they'd scribbled up. They wanted me to indemnify the hotel should the guy sue them. And I refused to do that because I might not mention him. This guy was so out of control, he may have sued them anyway. You know, it wouldn't have gone anywhere, but if I was obligated to pay for their legal fees, I mean... So, on the spur of the moment, which is contrary, you know, to like every fiber of my body, but, you know, I'm running a business, this would never happen in the States, I gave him a commitment that I could control, which was I will not mention him. That's all I can do. I can't control whether he sues you or not, regardless of anything. So I didn't mention the guy. I got back to the US. I'd been back where I live for 6 weeks. I get an email from the Metropolitan Police. Never heard from them prior to that, issuing me with a harassment warning. I mean, I just couldn't believe this. I mean, so who am I supposed to have harassed? This was very much a family fraud. One of the participants was his adult daughter, who, you know, was like in her 20s. She'd gone to the police and claimed that she was walking out of a building in East London. She saw somebody running down the street. Must have been bald, right? Just saw the back of it. Went to the police and said, that's David Marchant. Never met this woman, never tried contacting her, never called her, emailed her, sent her a fax. Never made any attempt, directly, indirectly, to have any contact with this woman. So the police said, look, even if it was him, so at best she'd seen my LinkedIn picture. If this was him, it doesn't amount to harassment. So her and her father made 3 more criminal complaints: phone hacking, blackmail, and attempting to pervert the course of justice. This led the police, the Met, to reevaluate this without contacting me in advance, sent me an harassment warning. So something that they dismissed as a complaint initially, because of these 3 unrelated complaints, unrelated in the sense that they didn't relate to me supposedly running down the street and her thinking this is harassment. I mean, why on earth I would do that as an investigative journalist, what the benefit is beyond my comprehension. So I had this absurd situation where I'd exposed a major economic crime that was primarily Britain. I had the the head of Charing Cross CID's Economic Crime Department issuing me with an harassment warning that was essentially on behalf of the economic criminal who used to be a former policeman. I was so pissed off at this that I tried to sort it out, like, maturely, professionally, didn't get anywhere. So I sent an email, like, explaining how absurd this was, and at the very end of the email, I said, you know what, just fuck off. I mean, that's literally what I wrote. That's how angry I was, you know. It was rejected by the police server because it contained profanity. I immediately received that this email could not be, sent, right, because it contains profanity. This is the police. Can you imagine if I was making a statement how I was in a bar, I was attacked, and the prelude to me being attacked was some guy came up and he started saying this, and the other. I presumably couldn't put that in because little old police couldn't handle swear words. So I immediately resent it, putting F***K off, and it got through. But the reason I say that is, it is remarkable in Britain. It's almost like they're on the side of the criminals. Like, everything is difficult. And it's ingrained in the culture. So this sort of segues into something else that I want to talk about. Britain has this sort of system of rewarding people by giving them titles. So very often in investment schemes and companies, you'll look at a board of directors in Britain, and the chairman is Lord so-and-so, and the other directors include Sir so-and-so, Lady so-and-so, Madam so-and-so, somebody OBE, somebody MBE. So in your experience, should this be a source of comfort to anybody? If you see a former member of Margaret Thatcher's cabinet, which I've seen, which is supposed to inspire you, I mean, does that mean anything to you? Is that something that impresses you? Doesn't impress you?
Certainly doesn't impress me. But I'm going to mention one person who did get a knighthood. I'm very lucky in that I work for a large newspaper group which has deep pockets, and in my contract I'm indemnified against any damages, any legal fees that I may incur personally in the work I do for the newspaper. The only time, I've had a number of writs over the years, they've never gone anywhere, with one slight exception. That was about 25 years ago. I was writing about a comparatively small bank. This was at the time when Montserrat was issuing banking licenses like confetti. And I was looking at a number of their banks, and one in particular which was advertising in South American newspapers offering over-the-odds interest even by South American standards. And it was using an address in those advertisements, an address in Texas. So I got in touch with the Texas banking regulator and was told, yes, we're aware that this company has claimed to have offices in Texas. It does, but it doesn't have a banking license. And whatever else it's doing, it should not be conducting banking business. And we have given them written and verbal warnings to cease and desist. So I started digging a bit deeper, and I found that a senator in Washington was making his own inquiries into the same bank in the context of money laundering. That was John Kerry, since come to even greater prominence. So I wrote about this, and I wrote about it in a magazine called The International, which doesn't exist anymore. It was an offshore version of the sort of thing I do in England, and it was run by the Financial Times group. It was part of Financial Times magazines. And we immediately were threatened with legal action for defamation. Now, cutting a long story short, the Financial Times lawyers advised the company to settle out of court because we couldn't prove that this bank was engaged in money laundering. Now, I hadn't actually said they were engaged in money laundering. What I'd said was John Kerry was looking into the allegation that they might be offending against laws, and I had printed that they didn't have a license to conduct Texas banking business, even though they were using a Texas address in their advertisements, which gave the impression that they were a licensed bank in Texas. The Financial Times lawyers said, settle out of court, it'll cost a couple of £100,000 to defend the action. Because this isn't a British company, there's no guarantee that you'll ever get the money back, even if you win. Give them £25,000 to go away, which is what Financial Times magazines did. So I licked my wounds for some years. To my horror, some years later, saw that the boss of the bank was getting a knighthood, but I was even more delighted when he was arrested and jailed. It was Stanford. So I'd written about Stanford 25 years ago. Several years later, the British government had accepted a nomination from a Caribbean jurisdiction to give him a knighthood for services rendered there. Everything collapsed a long time after that. But one of the reasons it collapsed was on the basis of evidence I'd had 25 years before about a fake insurance company in Piccadilly in London which was supposed to be propping up this bank in Texas, except that there wasn't really a bank in Texas according to the Texans. It was all smoke and mirrors, but nobody really took any notice. So the answer to your question, David, is no. Do I take knighthoods and peerages as a sign of this guy's trustworthy? No, I take it as a sign of somebody's being paid off for services rendered to a jurisdiction that Whitehall or the government wanted to be nice to. So give him a reward that doesn't cost very much money, give him a knighthood.
Stanford certainly performed services to Antigua, but they were all illegal.
And to cricket. And to cricketers' wives.
Yeah, that's right. Where one of the players, England took a bunch of money to play Antigua in cricket, and the match was in Antigua. And while the cricket was going on, the camera showed like the Alan Stanford box. One of the players' wives was sitting on his lap, and he had his arms around her. I mean, it pretty much summed that guy up. Are you familiar with WorldCheck? Anyone? Which is a database that's based in Britain that undoubtedly committed tax fraud by illegally transferring the intellectual property, which was the value of the company at that time, to a company in the Channel Islands. Alan Stanford appeared as a politically exposed person. This is way before he collapsed, in WorldCheck, because of his relationship with the family, the Bird family, Lester Bird and his brothers. They removed Alan Stanford from their database because a law firm called Greenberg Traurig in the United States, which knowingly helped Alan Stanford rip off investors all around the world and destroy people's lives. Well done, Greenberg Traurig. As part of their bullying effort to prevent Alan Stanford from being exposed, put pressure on WorldCheck to remove him. And this was all documented in, I think in maybe the indictment against Stanford or some related litigation. So this isn't just some fairy story that I'm making up. And in my experience, there are a number of reasons to be very wary of KYC databases because of things like the British libel laws, because of the spineless nature of certain people, or because of, it's wrong of me to say spineless. I think it's just natural to want to avoid, costly litigation that may personally bankrupt you or if you're a young company with limited capital, bankrupt a company. But with human nature, British libel laws, and Europe's right to be forgotten ruling, which has led to parts of OffshoreAlert's website being removed from Google, which I mentioned in my opening address, I believe, because we published a public document that was filed at federal court in the United States about a Dutch attorney, Guido Voyen, who was being investigated criminally for suspected laundering of narcotics trafficking. This was a public document, and Google removed it. So KYC databases are, in my experience, they're valuable to a degree. But I tend to look, when I'm looking at investment fraud, at structures, because just the way something's structured tells me whether it's legitimate or not. And everybody has a first time committing a criminal act. So the fact that somebody doesn't show up on negative information databases is neither here nor there. If I just see a structure that's structured a certain way, that's all I need to expose it. I think Tony maybe has a slightly different take on the reliance on KYC databases over structure.
I look at names. I work on the basis that companies don't, of themselves, commit offences. Now, I know that companies are artificial personalities, and yes, you can prosecute a company, but the guiding mind behind every company is a human mind, or human minds. So my databasing, my KYC work, revolves much less around companies and much more around individuals. I've got about 2,000 companies on file and about 20,000 individuals on file that I've gathered over 3 decades of doing this sort of work. And it's surprising how often the same individuals come up time and again. But as David says, people who commit offences must have committed a first offence, in which case you probably don't have them. But I might, because I often am able to database what I call the marzipan layer of an offence, so that if there's a Ponzi scam, it's not just the small number of people at the top, but the people who promote it regionally and locally, that I try to get the names of, people who are speaking at recruiting meetings up and down the country. I try and get their names, database them, and see whether they come up time and again. And yes, they do. The same people knowingly go in for this time and again, and I know that if I see that particular name, Len Fitzgerald, for example, just to pluck one out of the air, I think I've got on file for 3 separate scams where he's not been a principal in it, and he can put his hand on his heart and say, I wasn't running it, and I'm as much a victim as anybody else, because at the time they collapsed, they owed me £10,000 in commission. But he won't tell you about the tens of thousands of pounds that he'd already got in commission for promoting the scheme. And that keeps him out of the spotlight to a certain extent. It's individuals that commit the offences, though, and I think that's the message I try and get across to the people I write about and the people who read the stuff I write.
So, one of the things that is a dead giveaway when looking for fraudulent companies are the company formation agents. Now, this came up yesterday when we were talking about Moldova. Why does a Moldovan fraudster or a Russian fraudster or whoever seek to have an English company? Because it has, it's similar things to the Lords and the Sirs, it has a cachet in the rest of the world. Now, that company will nearly always do absolutely nothing. Or it may help to transfer money. But presenting to Moldovan judges with the fact that you are the owner of XYZ Limited in London with an address, properly formed, but the formation, there's a limited number of people who form these companies. So one gentleman, and I'm quite happy to name him, who comes up over and over again, is a guy called Jesse Hester. He has an industrial number of directorships. And you look at all those companies, and they're nearly all now either sold, liquidated, whatever, that kind of thing. But he manages, he's like the Scarlet Pimpernel. He's now apparently in Mauritius, a well-known centre of financial integrity. But he, he's likely to turn up in Liberia, Panama, or the Caribbean tax, whatever. So I would stress to people, if you always look at who has formed them. Because if these people have formed them, you ask yourself the question, well, why don't they go to one of the reputable ones, which there doesn't? Why is it always the same name? The one giveaway is they always have hundreds of directorships. 798, and a lot of Russian companies you will find use Cypriot citizens to form their company. But there is, given David Wright, as soon as you see that, the Madoff thing, people should have seen straight away, because that's how his performance works.
The amount of red flags with Madoff was off the charts.
Yeah. But see, the problem with that is people don't want to hear. You're the person, you're the little boy saying that he's got no clothes. Because once a boom in the share is going, it's very good. Enron was a classic example. People, again, the red flags there, people don't want to hear you. But that's not, as an investigative journalist, our job is to spot these things. And as I say, it is a very good pointer if you find one of these names coming up and over again and your company is formed by that, you can probably guess that it's a fraud.
I'd go further than that. I'd say don't trust Companies House, let alone the company formation agents. You can register a company directly with Companies House anyway without going through a formation agent, but Companies House has become a much, much weaker instrument. It warehouses information, it says. It doesn't check it, doesn't verify it, it's got no duty in that respect, and even when you point out things that are wrong with it, it takes little or no action. So what you've got is a system which allows people to register under more than one name. So if you're trying to track down whether somebody has had failed companies in their past, it doesn't necessarily work, because John can become Johnny or Jonathan, James can become Jim or Jimmy, with various spellings. There is no way of telling whether the person you're looking at is the same as the person whose company went bust 2 years ago, because Companies House itself, which is supposed to connect up these directorships, doesn't. The addresses that people give don't now, and this is the fault of government, not just Companies House, don't now have to be their residential address. You can give any address you like. And very recently, within the past couple of months, Companies House has started to delete the first digit from dates of birth. So if you're looking at John Smith, born in April 1960, how many are you going to find? And how many addresses are you going to find? There is no enforcement, even when you tell Companies House itself, something's wrong here. I've been looking recently at one fraudster, and this is a guy with a criminal conviction. I don't use the word loosely. He did I think, 5 years for an investment fraud. A man called Julian Blee, who has used at least 3 different names, to my knowledge, in Companies House filings, and boldly tells me, well, I'm entitled to change my name if I want to. And yes, he can. But there's nothing to connect the dots at Companies House. There's nothing to protect the public who now don't know that the investments he's promoting today are promoted by a guy who went to prison for promoting investments 10 years or so ago.
We've got a question back there.
Hi, my name's David Pitts. I've had 20 years in the investment industry in Australia and the US and Japan and now here. And thanks to this really succession summit, caught a world scam when I was very early on. It's very interesting to hear. I just want to talk very quickly, address very quickly coral student housing. I currently work for CBRE Direct Investment Services, and I just want to say that we've been an investment advisor at coral student housing since 2011, and during that time we have provided advice on all their investments in the UK, many of which we physically visited and assisted with due which approximately 5% is in cash, the remainder in various separate projects. And once again, all the UK ones have been visited, and I can confirm to the audience that they exist and are in various stages of life and operation. So I just want to make that statement on behalf of housing, if that's helpful to the audience.
I don't doubt that they have assets. You know, one of the incorrect assumptions about Ponzi schemes is that they don't have any underlying activity. And I'm sure the Coral, Student Accommodation Fund does have assets. And this is one of the reasons why people fall for these schemes. I mean, look, you're intelligent, you're articulate, you work for a bona fide company. It gives people comfort. None of that matters. That diagonal line, 100% of the time, indicates it's a Ponzi scheme. Not some of the time, not most of the time. Every single instance. That's just reality, or my reality, and hopefully your reality. You're going to earn a lot of fees before it collapses. But I give you my absolute guarantee this will collapse. The only thing I don't know is when. You can never predict when. I take myself seriously when it comes to my work. I wouldn't be standing here putting, my reputation, whatever that is, on the line if I wasn't absolutely, there's not a shred of doubt. One of the things I just want to quickly end with, one of the subtle indicators of fraud is just a name. Fraudsters tend to have big egos. People with big egos tend to name companies after themselves, and it might not matter with law firms where you have, these really long, boring names of every single person who has an equity interest in their damn company. But when it comes to investment, the investment industry, where you're asking people to entrust you with their money, it's a huge red flag. So take Bernard Madoff. What was the name of his company? Bernard L. Madoff Investment Securities. His ego was so big he had to put his middle initial in his name. Alan Stanford, the Stanford Group, Stanford International Bank, Stanford Trust Company, Stanford. People with big egos, they crave the appearance of success. So even if they start off legitimately and things go pear-shaped, their natural inclination is to start covering things up because they don't want their company to fail. They cannot handle it. I exposed something called Axiom Legal Financing Fund, which is what essentially the Metropolitan Police warned me about. The former policeman, British solicitor, now struck off, who committed that was called Timothy Schools. His investment management company was called Tangerine Investment Management. Well, what does that abbreviate? What's the acronym of that? TIM. His name is Tim Schools. He had a law firm that was, a lot of the money that he raised with his hedge fund was diverted to a law firm that he owned. The law firm was called ATM Solicitors because he considered that company, he treated that company like a cash machine. I mean, that's how crude it was. And, if you actually start looking at some of these things, you can sort of kick yourself that you didn't see, or as an investor, they should be kicking themselves. Man, how could I have, not seen ATM Solicitors, or Tangerine Investment Management? That's a sort of a subtle sort of red flag. But, any time I see an investment manager who names his company after somebody, it invariably spells bad news. Even well-known people in the investment world, like George Soros. George Soros is considered to be respectable, hugely successful. He's got a criminal conviction for insider trading in France, where his punishment was he was just required to give his profits back, which is amazing. I mean, that's a crime without any meaningful punishment. This guy operates, in secrecy offshore. You show me somebody in the investment industry who consistently makes money, and I will maybe not show you because maybe I can't gather the evidence, but in my mind, they are doing something illegal. And it doesn't matter if it's Soros, doesn't matter who it is in the investment industry, because the only honest sales pitch is, give me your money. It might go up, down, or stay the same, and I don't know which of those three scenarios is going to play out. And if I did know you were going to make money, why am I soliciting you in the first place? It just doesn't make any sense. If there's anything that is sort of guaranteed to make a decent return, you don't tell anybody about it. You just put your money in it. You sit at home with your feet up. And you live off the annual profits from that. So even so-called respectable investment schemes. You see these targeted returns, projected returns, simulated returns. It's just all nonsense. I see that, and it just indicates to me that even if these people are honest, they don't know what they're doing. Yeah.
Thank you very much. Before a quick question, which is based on, for all of you, based on Tony's point about the dots not being joined up, which, you really can't exaggerate the importance of that. I'd just like to ask, what contacts have regulators or law enforcers made to you about anything you have written or said? They thought, oh, here's something from Richard. This sounds interesting. Let's have a look at it, and contacted you. Or the same, of course, to Tony, who's in a national newspaper. I will just say in relation to the gentleman's comment there about the company formation agents and the example of Moldova and Russia, because the UK formation agents give a cash aid. That is a very, very real point. They all, of course, know that it's a complete sham, but it is the excuse used in these countries for not doing anything. It's the UK, it's clean, which is the alibi rather than the reason. Because privately, where they all say, why on earth is all this money leaching out? And that goes right up to the Chinese border in Central Asia. And regarding the Cypriot point, I'll just highlight one issue. In 1999, I raised the implications of dirty money in Cyprus when they were planning to buy the Russian S-300 anti-aircraft missile system. And the Turks announced that they would either intercept the shipment, as the ship sailed through the Bosphorus, and they announced they were sending a fighter squadron to Israel for special training. And I thought, wait a minute, how on earth are the Greek Cypriots paying for this top-of-the-range, very, very capable system? A few years later, I publicly asked the then foreign minister of Cyprus, were the missiles offered on easy terms in return for Cyprus providing a safe haven for Russian dirty money? And the minister's reply was, I was not a minister at the time, which is not a denial. So, you're saying things, we need to be listening. Are the regulators and law enforcement contact?
Just one immediate thing from what you said is yesterday the SFO, I noticed there was an extremely burly gentleman who was standing on my shoulder. He was an SFO officer, detective, whatever, who wanted to speak with me about Axiom Legal Financing Fund, which was the same thing that I had this harassment warning over 4 years earlier. So the SFO have finally got around to investigating it. So I'm seeing them on Thursday morning. So, and the first person to sue me for libel is now serving 17 years in prison for money laundering and tax evasion. He sued me for libel I went to the US authorities and they arrested him in Nicaragua about 5 years later, and he's serving 17 years in prison. And in my experience, the most effective way to fight a libel action is to go to law enforcement and teach them a lesson. And then after you've taught them a lesson, you publicize it, and you hope that future prospective litigants will be deterred. You know, for me, that's the most effective. Not libel insurance isn't an effective way of truly defending yourself against these, financially against these actions. It's putting them in prison and boasting about it, you know.
Anyway, yes, to your question, my experience has been very patchy. Police forces are sometimes quite attentive, and I go and bore them, you know, for an hour or so with some sort of presentation. Regulators, mixed bag. Some are unresponsive. Some sort of explicitly tell me they're not going to do anything. And I tend to sort of go around them to the politicians. And there, if you land on the right spot, you can have some sort of visible short-term impact. How it works long-term, I don't know yet. I had some success harassing the New Zealanders over the last 4 years over their Companies Act and also their financial services supervision. That's still playing out. They're now in a very embarrassing situation where their regulator is getting sued by obvious offshore crooks for refusing to register or deregistering obvious frauds, which is kind of a plight, but they can't say they weren't warned. But there, you know, it varies a lot. I would say New Zealand is actually a relatively responsive and sensible type of country. In the UK, it's slow work. It's what David said. It's a bit of a trudge. However, there are some places where they prick up their ears when I pluck at their sleeves, as it were. So, yeah, it's variable.
Sure, everybody's bored of student accommodation firms by now.
Yeah.
Can I just say about Coral, which we were talking about, and you mentioned the Grange student accommodation fund, which you mentioned was a Ponzi.
Well, it was a Ponzi.
Yeah, it was suspended for 2 years. The assets were sold for 1.1 billion.
Correct.
Canadian pension fund.
Correct.
I think investors received 95% back in March this year, 4% in May, and then 1% towards the end.
It was suspended, the net asset value went down significantly. So the percentage that you're talking about isn't, you know, it's not a percentage of 100%. The value was dropped, and they got a percentage of the dropped value.
The value was dropped to about 10%. But since 2007, it's probably taken away from account investors who received, say, a 30% return. So it's a Ponzi scheme where everybody's got their money back.
You know, it's not one that I brand out, personally investigated. I've got some familiarity with it. I saw the performance chart. It was a Ponzi scheme. A Ponzi scheme is a fraud. People don't make money, or the early people will make money in Ponzi schemes, but there will be plenty of people who would have lost out significantly in that.
There's another one, Mansion Student Accommodation.
Right. There's a lot of student accommodation funds, but yeah. No, I'm familiar with, you know, the percentage pay, you know, I mean, what little I know, you know, I'm familiar with all of that. It wasn't clear to me how much, you know, like the performance charts that I saw were before it was suspended, you know. So just think about it, right? So this is the performance chart of the Brandau Fund, right? So why was it suspended? I mean, look, they're making money, right? Consistent returns, whatever it was, 7, 8, 9, 10% every year, consistently, right? Well, and then they just run out of money?
Their answer is that they're trying to invest in a liquid asset, in a liquid fund, and redemption.
I mean, this is basically the performance chart of Ponzi schemes. So it goes up like this, and it just...
Well, it's not true. The guy back.
What?
It's kind of like there's no assets, so there are things you can go and touch.
There are assets in many Ponzi schemes. You know, Alan Stanford had plenty of assets. Yeah, he had an Alan Stanford jet with an Alan Stanford gold toilet with his logo. You know, he had plenty of assets. So, you know, anyone who's called Stanford, you know, could have bought these things up on the cheap and legitimately, you know, made use of them. But, you know, listen, you know, so he made a, you know, credible point. You've just made a credible argument about Brando, and this is one of the problems why, you know, I'm passionate about exposing investment fraud. You've got to be passionate to do what we do for a living. You have to be emotionally invested in it, although when it comes to writing a story, I write it very cold. You know, you can't write an emotional story. It's pathetic, you know. But, you know, to actually spend the time, put up with the death threats and, you know, and other threats, and you know, I've spent a ton of money defending lawsuits. Very often I didn't even have that money. I had to borrow it from friends, you know, on a handshake and an email. And in order to stay in business, I formed another company called World Compliance, which was a World-Check type company. I was being sued in the Cayman Islands in a libel action. My legal fees were $350,000. We had 2 hearings. And I went to my business partners in this other business that would all be my idea, and I said, look, you know, I need some money. I'm prepared to sell you some shares at a 20% discount. They took the opportunity to swindle me. And I had to, then it became, instead of an asset, it became a liability. I had to hire an attorney on a contingency basis. We had to sue them. They didn't have a leg to stand on. I got quite a substantial amount of money. And I then used that money to pay my debts to my friends, and I threw on something extra, you know, for believing in me. You know, so you got, you know, you got to be like, you know, really sort of passionate. And the victims of financial crime, I mean, it ruins their lives. People commit suicide over this, you know. I mean, you know, it's easy to talk about it in terms of, you know, unemotionally, really, and just in terms of fees and returns and charts and everything else. But, you know, people are financially unsophisticated. It's amazing that no finance courses are taught in school, like basic finance. If you consider how important it is, you know, when you become an adult, I mean, it's extraordinary. People lose their life savings. It makes them miserable. Both perpetrators and victims commit suicide. I mean, I've come across plenty of examples of both. You know, and I always, you know, whenever I'm investigating a fraud, that's the thing that drives me. I just imagine, I've got a friend of mine, his parents were super nice people. I always imagine my friend's parents getting defrauded by the person I'm investigating.
How come you can see that this is a Ponzi scheme just by seeing that chart, but all the law firms, RBS, can't? Now, if there's an answer to that, there surely are other questions to ask that.
Yeah, so you know.
I'm just interested why you can see that with these firms.
Right, so I think I mentioned earlier that the Kajani Resources Fund, which is part of the Belvedere Management Group, which is a massive criminal enterprise that collapsed very shortly after we exposed it earlier this year, the Kajani Resources Fund component, that's all it was. That was enough for me to run whatever risk there is, just saying, look, this is a fraud, that's all you need. I had journalists in South Africa where a large part of this was based, basically laughing at me. We exposed this whole group. The whole group has collapsed. Probably a dozen companies have been closed down in Guernsey, Mauritius, the Cayman Islands, you name it. And in the Cayman Islands, the CIMA, the Cayman Islands Monetary Authority, appointed inspectors to look at this. They produced a report. Guess what? It's a Ponzi scheme. So the only thing that I had to go on was this. The investigators had access to the books, the records. This so-called commodity fund, trading fund, there was no evidence that it ever conducted a single commodity trade. Not one. It was literally money going in and money going out. It's different to these student accommodation Ponzi schemes, which, you know, have some assets, some legitimacy, which quite frankly makes them more dangerous than the more Mickey Mouse ones. But so how do I know? It's just experience. If every single instance of you seeing something like this ends in a fraud, 10 years ago that wouldn't have been enough for me. But in the last 10 years, I've investigated so many more than I had, prior to 10 years ago. So, how do you know something's a car? I mean, you don't need to, take some sort of engineering course and learn about combustion before you know something's a car. You stick the key in, you drive off down the road, this is a motor vehicle. So it's just experience and whatever abilities, I possess, and of course, whether you want to believe that or not, it's entirely up to you.
Then how do you the advisors to the schemes?
Well, some of them are well, which advice? I mean, IFAs. I mean, the entire the IFA industry is just full of people who, at best, you could say are immoral. So look, if you can't spot that, you maybe don't have the experience. You maybe don't care. I mean, if you're in a fee-generating business, any business, the particularly anything where you have to answer to shareholders, the pressure to generate revenues is overwhelming. And really, what are the risks? As we've heard, the regulatory risks are minimal. The risks outside the United States of being criminally prosecuted are almost non-existent. They're so small. The temptation to continue receiving fees is overwhelming. And a lot of people aren't honest. A lot of people just don't care. They care about money. They care about buying nice things. They don't particularly care, how they make that money. That's my personal, experience of life. Your experiences may be different.
I think my question has a bit of correlation there. I think whether or not we're talking about the true Ponzi capital P fraud, or if you look at recently the Arch Crew,
Right.
we saw a bit of regulatory action there, but we've got advisors. You mentioned BDI, you have all these professional advisors, a bit like regulators. They look at things with their blinkers on. They come in and they advise on the piece that they're paid to. And the reality is that it's like a Ponzi within a Ponzi scheme. Everybody's self-fulfilling their task. If you go back to the Split Capital Investment Trust for 20 odd years ago, again, what we had was professional advisors just building a domino effect in regards to what they're investing in. But that was all regulated and all by law.
Yeah, regulation means nothing. Another Ponzi scheme I exposed was a litigation funding scam, they're very popular at the moment. Litigation, any given time, certain things are popular. Forex, gold schemes. Litigation funding is very popular. Britain sort of changed its law that opened up this area. There's a lot of legitimate litigation funding. There's a lot of, but for some reason, fraudsters have focused on this. So Argentum Capital Limited, based in Jersey, again, we called it a Ponzi scheme. Chairman of the board was the Right Honourable Sir. So before his name began, you had this Right Honourable Sir, which is designed to make you impressed before the guy's name even begins, David Keane. He's a former High Court judge in London, and the last time I checked, he was the president or deputy president of the Qatar, commercial court. He was the chairman of the board. I contacted him before I exposed this scheme, just to tip him off. I'm not a bad guy, look, the guy, Right Honourable Sir, let's do the guy a favour. I tipped him off, never responded. I sent it to all of he's affiliated with the London chambers. I copied it to all of the I don't know if you technically have partners in Britain, whatever, all the members of the chambers, whatever they're called. I copied them all in on it just to make sure it got through. Never heard from the guy. The whole thing, again, I put my neck on the line. This is a Ponzi scheme. That's all it's based on. It inevitably collapsed. And you know what the guy did? He just resigned. Which, quite frankly, if you're truly an honourable person, when the going gets tough, that's when you're required the most to look after the interests of investors. But he just resigned. This wasn't an honourable guy. Regardless of how impressed you want to be with his, the fact that he's a retired judge and he's involved in, None of this, I come across somebody, sir, lord, lady, it means nothing to me. If anything, I'm unimpressed. It certainly doesn't impress me. So just to answer your point, I mean, this is a retired judge, and he was involved in a ridiculous Ponzi scheme. So, I know what a Ponzi scheme is. He didn't care. But with my job, very often I come across schemes, and it's all, Royal Bank this and Sir this. They're all involved, So it's almost like, here I am, some small person, and I've got the whole might of this, but I know it's a fraud. I report it's a fraud. There's some official investigation, and it's proven to be a fraud. There's never been a single instance of the opposite happening. And, I exposed that particular one, Argentum, and I inadvertently sent an email that was criticizing me. So two IFAs who were involved in raising money, who'd also raised money for another Ponzi scheme. So I proved myself. They'd raised money for Axiom, which I'd exposed, right? They became clients of mine. Then I exposed another one, and one IFA sent an email to his partner saying, Marchant, he doesn't know what he's talking about, he's wrong, this guy's off the rails, the chairman is, this retired judge, blah, 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 blah. But it inadvertently got copied, to me, so... I wrote saying, look, I will be proven, time will show me to be right, and within, 4 weeks or something, the whole thing had collapsed.
Just as I may be
Yeah.
in how much proof, because I don't think I'll get that positive view of my employees, just a bit of fact.
But that's all the proof. That's all the proof. That's 100% of the evidence you need, right? If you're dealing with people who, see, the financial services industry is just full of people who are clueless. I mean, it really is. I mean, they're just generating fees. Their clients' money goes up, goes down. Fees come in, fees come in, fees come in. That's all they're interested in. They've got no clue whether, this is my opinion based on my experience.
So it's a hunch.
But what's a hunch? No, it's 100%. So when you go outside, do you have a hunch that that vehicle, is a motor vehicle, or do you know it's a motor vehicle? Do you have a hunch that we're human beings, or maybe we're aliens? I mean, that's not a hunch. That's 100%.
If it walks like a duck, if it quacks like a duck, it's a Ponzi. Yep.
Anyone else have any questions?
Can I come back on just one point, David, about compartmentalising? Lawyers, auditors, accountants, even company directors see things as their particular duty, and as long as they are fulfilling their particular duty, that's fine. And I want to add to that by saying that regulators are exactly the same. I'll give you one example, something I'm dealing with at the moment, involving the FCA in Britain, but because the FCA can turn its back, it does. And that's a company called Bank de Binary, bank spelled B-A-N-C. Now, this is a binary options company. In Britain, the FCA regards binary options as gambling, not investment. So when I went to the FCA and said, this company is opening up in Britain, are you regulating it? They said, no, speak to the Gambling Commission in Birmingham. So I spoke to the Gambling Commission in Birmingham, and they said, well, do they have any physical premises in Britain? And I said, well, they've got an address in the City of London, and they've got a London telephone number, but there's nobody actually there, and the phone calls are diverted offshore. Oh, well, in that case, we don't regulate them, said the Gambling Commission. Have you tried the FCA? So, back to the FCA, and the FCA said, we still don't regard ourselves as being the regulator here, but, they're regulated by Cyprus, the SEC in Cyprus. Now, in Cyprus, they don't have the same law as we do in Britain about who can call themselves a bank. You couldn't register a company name in Britain with the word bank in it, even if you use a foreign spelling, without going to Companies House and saying, special application, I want to call myself a bank. Companies House would then check with the FCA. Are these people allowed to call themselves a bank? And the FCA would say, no, they're not allowed to call themselves a bank without our consent, and we don't give our consent. Except that Bank Binary can get onto the FCA register and is on the FCA register because it's registered in Cyprus. So what we've got is the FCA refusing to regulate Bank Binary because it doesn't regulate gambling. It refuses to authorise the name bank because it doesn't allow that in Britain unless you're a genuine bank, and this isn't a genuine bank, and yet the company is on the authorised register if you're a member of the public and look it up. And yet that same company has been fined at least 4 times, to my knowledge, by the Cyprus authorities for withholding information, for providing false information. It's currently going through litigation in Nevada because it purported to have its world headquarters on Wall Street. It assured investors in the United States that all the information they gave, their personal data, would be stored within the United States where all our employees are based. An utter falsehood. And it's going through a civil court action now being brought by the SEC and the CFTC, and it's trying to negotiate its way out by coming to some form of settlement which won't actually include any finding of guilt. And it's got until, under current circumstances, it's got an extended deadline. It's going for the end of this year to hold itself, to get out of that particular mess that it's in. But at the moment, it's there on the Financial Conduct Authority register with no disciplinary action against it, despite fines, despite litigation. It has a British address that it's not really at. It has a British telephone number that isn't ringing in Britain, and it's conducting itself in an investment form which isn't an investment according to the FCA. So it's not just auditors, it's not just accountants, it's not just lawyers, it's regulators themselves that tick boxes.
We've got to wrap up, but I'm going to put my money where my mouth is with you. Can you please give me your business card? This is being audio recorded, so this constitutes, a very one-sided verbal contract. If both of these schemes haven't collapsed in 7 years, I'll pay you £1,000. Now, the one thing with Ponzi schemes is you can never tell when they're going to collapse, but Madoff went on, for years. But I would say, without a doubt, based on what I know of these, they're both going to be dead. Both of them. Not one. If one collapses and one's still around in 7 years, I'll pay you £1,000. But they will both collapse. I'm not a believer in being smart after the fact. I like being smart before the fact. So there we go. So give me your card, okay?